Hello traders, Gary Wagner here. It is Saturday, March 26th, and this is the daily report for gold and silver, our weekend review. Gold futures closed slightly lower on the day, down $4.60, but had a very respectable gain on the week. Currently, we have the April contract of gold futures at $1,957.60. We took profits on our long April position. However, we also rolled over into the next front month, which is the June contract, which is currently fixed at $1,963.20. Because the April contract was quickly coming to first day notice, that will occur next week, we felt it prudent to take profits, $1,200 per contract, and immediately get into the June contract, which we remain long from 1934 with current pricing at 1963. Traders, we also recommended the accumulation of GLD, the Spider Gold Trust. We entered that position at 179.32, placing our stops below that price point. But as GLD value increased, we trailed our stop up. Our stop is currently at 181.20. So to recap, we will be going over the weekend long June gold at 1934. We are long spot or Forex gold from 1921 and maintain positions in GLD at 179.32. Traders, I am most excited as to where I believe gold could head in the next 3 to 6 months, and that is to a new all-time record high. This forecast has been created using a combination of 3 tools, the same tools I've used over the last 20 years, which is candlestick analysis, Elliott wave counter theory, and Fibonacci retracements and extensions. What we are looking at is this. First, to our Elliott wave count, these numbers that are in a rectangular box are our intermediate, and the smaller numbers here are simply the minor or the subcount that goes behind that. I am making the assumption that we hit the conclusion of wave 2 back in February 2021 and began the longest of our impulse waves, our wave 3. I believe that concluded at the all-time record high, August 2020, when gold hit $2,088 per ounce. From there, we entered a long, protracted correction, taking gold from the record high, $2,088, down to the end of the correction at $1,681. What is most interesting about that is if we measure the distance move of wave 3 and look at the correction at wave 2, it is exactly a 61.8% Fibonacci retracement. This concluded 4, and we are now in a final 5th wave. Wave 1 was basically a parabolic line up, a very strong move, moving from 1681 up to about 1883. Wave 2, rather than being what we call a straight ABC correction, was created as a compression triangle. You can define that as a series of lower highs and higher lows until it breaks above this long-standing resistance line, which is labeled a thrust, which makes this the beginning of our wave 3. Wave 3 concluded at $2,076, just about $12 shy of the all-time record high, which began our 4th wave correction. That took us to another 61.8% retracement, and I believe we are now in our final 5th wave, which brings us to our forecast of wave 5, in other words, where this rally will conclude. There are 2 techniques that are commonly used. They both involve Fibonacci extensions. One is to do a 1-to-1 extension of wave 1 to wave 5. The one that I prefer, though, is basically measuring your 3rd wave and then doing an extension from the beginning of wave 5, which of course is the conclusion of wave 4. A 0.618% extension is going to put you right in the same place because that was the retracement. I don't believe that's likely. I think that we will get a new price high, which would be above 2,088. At minimum, I believe gold will trade to $2,180 up to $2,300 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.